finding right now where I've had pre-approvals for clients even a year ago or 2 years ago, and they didn't buy anything. And right now they're actually buying, even though interest rates are higher. But because price values have come down by at least, what would you say? Like the price of a home last year
About
around
25%.
25%.
Well, that
In terms
depending.
of numbers, like let's say if it was a $700,000 house last year, like I am finding homes, nice homes that are selling for 550,
Yeah.
540, 480, where if an offer came to my desk 2 years ago at 480, I'd be quickly going to look at the listing and looking at the condition of that home, because
Yeah.
lenders look at conditions of homes, and if they don't like the conditions, they'll approve the client, but they might not approve the house.
Exactly. Yeah.
But today, like 480, 520 can get you a nice house. So I'm talking to
Yeah.
first home buyers where I'm saying, buy that home today,
Yeah.
because even though at a higher interest rate, 2 years from now, that home's going to be worth more, because interest rates are going to come back down. What goes up will come down and will eventually come down. And when that home is priced higher, valued higher,
Mhm.
we can look at lower interest rates at that time. So I am finding clients that I've pre-approved before where they were getting into like 2021 offer bidding wars, and now they're not.
Yeah.
And they're really happy because they're able to get into that house
Yeah. And
like 100,000 or 150 cheaper.
yeah, and every situation is completely different, obviously. Every house is very different. Every client is very different. And some of the houses have dropped considerably, but with the mortgage rate increase, they're basically paying essentially the same mortgage price.
Correct.
But, the overall, they're paying a lot more in interest, unfortunately less on principal. But if they can accelerate that payment method, then they'll be paying less interest and hopefully more on principal. But, that's the value of equity that you have. Now,
Exactly.
It's unfortunate that houses are still very expensive because, in the 70s or 80s when it was like what, 18 and a half, 20% plus, I think a long
That's
time ago.
correct. Yeah, but then
Houses were only
like
120 grand, you know, so
yeah,
it's very
100.
different.
But I mean, I was talking to somebody the other day and he said I bought my house for like 55,000.
Yeah.
And like, so $55,000, 18% interest. I don't have my calculator here, but like the payments, but then, the income levels and everything,
Becomes different.
you
Yeah.
have to look at everything at the time compared to now. But
Well, it's
yeah,
pretty well defined. It's pretty well defined that our income's definitely not kept up with the housing price. That's for sure.
yeah,
And especially for entry level jobs, or people getting into new careers, first time buyers aren't going to be making usually the 100K plus jobs. But they're still looking at homes that are requiring something along the lines of at least a combined income of 100K plus. Common to see that here in this area, but I think this is why I've been hearing of a lot more people getting co-signers. And
yeah.
I just feel for them. It's like, I don't have the answers, obviously. There are options, but unfortunately the country is just very difficult at the moment. But to see people almost going paycheck to paycheck just to pay a mortgage, well, that's not life either. That's not a good way to live either.